So there's only just 1 week to go before the two-pot retirement system becomes effective on the 1st of September this year. And I was just watching the webinar by SARS where they were talking about the tax implication of this. So I've done a video that explains what the two-pot retirement system is, and on today's video I want to be telling you what you need in order to be able to withdraw your money. If you want to be able to withdraw your savings, what are the tax implications, the fees that you are going to be paying, and also just bringing more clarity in terms of other things where you found that there was not really much clarity. So first of all, what is the two-pot retirement system? So the two-pot retirement system, it just means that now your pension is divided into two. So it is divided between the savings pot and the retirement pot. So that is the two-pot system. So when you are contributing every month, 1/3 of your contributions goes towards the savings, and then the 2/3 goes towards retirement. And the purpose of this was just to reduce the amount of people who are forced to resign from their jobs just so that they can have access to their cash. So this savings is now going to give people more flexibility. And then, so what happens to what you've already contributed prior to the 1st of September? That one is going to be in a third pot called the vested pot. So everything that you've contributed plus the returns that you've made on it, it will be sitting here on the vested pot. And then now you might be wondering, we are going to address what happens now if you do decide to resign after the 1st of September, or what happens when you retire, what are the implications. I will address that. But for now, I just want to show you that if you are going to be withdrawing, remember from the 1st of September, you are going to be having some savings already into your savings pot, because they are going to take 10% of your retirement fund balance, or 30,000 rand. It's limited to 30,000 rand, so you will already have that sitting on your savings pot. So if you want to be withdrawing it, these are the conditions to withdraw, because don't be shocked if it gets rejected or if you don't get anything. It's because of this tricky requirements. So first of all, the withdrawal requirements, you must be registered for income tax. It's important to have that tax reference number, be registered for tax, because if you are not registered for tax, you will not get your withdrawal. You will not be able to withdraw your savings. Secondly, your tax returns must be up to date. So if they are not up to date, you also won't be able to get your savings. Thirdly, there must be no debt owing to SARS. So if you have a debt outstanding, you are owing SARS money, when you do decide to withdraw, firstly, that portion will be allocated towards the money that you are owing to SARS. So you must make sure that when you are withdrawing, nothing is owed to SARS. And one thing also to note is that the minimum amount that you can withdraw is 2,000 rand. It's minimum that you can withdraw, but there is no maximum that you can be withdrawing, and it's limited to only one withdrawal per tax year. So you can only withdraw once per tax year. So here is an example. Let's say come the 1st of September and you do have an emergency and you want to be withdrawing that 30,000 that's already been moved from your vested account to your savings pot. This is what's going to happen. You want to withdraw the 30,000, so you contact whoever the fund manager is, the fund where you are keeping all your retirement. You contact them that you want to withdraw 30,000. This is what's going to happen in terms of the taxes. So it's going to be depending on where you fall into, what is your tax bracket, because the savings amount is not taxed like your retirement. You know, with your retirement, the first like 500k is like there's no tax on it. But when it comes to this one, the savings, the tax is different. It's taxed like how your salary would be taxed, or how your other forms of income would be taxed. So firstly, your annual, your taxable income will be considered. So for instance, if you are going to be using the tax tables and your annual taxable income, maybe excluding these savings, comes to 360,000. Based on the tax tables, 360,000 is taxed on 29%. 29% is the tax rate for 360,000. But because you are going to be withdrawing the 30,000, now you are going to be above that tax threshold bracket of 370,500. Now you will be moving over to the next tax bracket, which is taxed at 31% because of this savings withdrawal. And because of that, it means that now that 30,000 that you're withdrawing, it will be taxed at 31%. So it will be 30,000 times 31%, which means that there's 9,300 that will be going over to SARS. You are not even going to see it. It will just go directly to SARS, that 9,300 from the 30,000. And then also for them to be processing your funds, the fund is also going to be charging their own fees. So every fund will decide on their own fees. But I've seen with Alexander Forbes, they say that their fees are going to be 2% of the amount that you're going to withdraw, but kept at 600 rand. So for this example, we'll say the fees, they come to 600 rand. So if you have owing taxes, there's an amount that's going to go to taxes. But for this example, let's say all your tax affairs are in order, so nothing will go towards the taxes. So the amount that you are going to be receiving to your bank from that 30,000 is only going to be 20,100, meaning that you are only going to receive 67% of it. Like from that 30,000, you're only receiving 67% of it because of the taxes as well as the fees that are being charged. So before you withdraw, you also just want to be calculating it. And also on the SARS website, you can actually do your calculation, which is based on the lump sum. So there's somewhere where you can go to calculate. So for now, they are still busy coming up with a calculator that will be designed specifically for the two-pot retirement system, but there's nothing in place as yet. So you have to calculate it yourself. So what happens now when it comes to you resigning from your job after the 1st of September? Remember, before September, you could resign from your job and have access to your retirement. But now this is what's going to happen. When you do resign after the 1st of September 2024, you will have access to your vested amount which you've contributed up until like the 30th of or 31st of August. You'll have all full access to it. You'll still have full access. You will have access to all the savings that you would have contributed after the 1st of September. You'll have full access to it. But when it comes to your retirement, which in this case we say it's a C, there is nothing. You won't have access to it until you reach your retirement age. And then what happens if you do retire? When you do retire, now you're only going to have access. When it comes to your vested portion, you're only gonna get 1/3 of it in cash. The 230 will have to be in the form of an annuity, And then what happens, savings, you'll have full access to all your savings. And then when it comes to your retirement, you'll have to purchase an annuity when it comes to your retirement. So what happens in the case of a divorce? So when it comes to divorce, you'll have access to all these buckets, but they'll be taken out proportionately, these buckets from the respective buckets.